Welcome to Building and Protecting Your Business Worth program, where we invite business owners and professionals to share their successes, failures, business struggles, and ideas to help other business owners and professionals grow their business. I'm Tom Perrone, your host and moderator. Today, we have another great program, and I would like to welcome Vito MAZZA. Welcome to the program. Vito, thank you for spending some time with us today.
Hey, Tom, thank you. This is a great honor for me.
Well, you know, we just did a podcast with you and we talked about a lot of things a couple of weeks ago. And
Yes.
Anybody who would like to listen to it, go on to Building and Protecting Your Business Worth podcast on Apple, and you will see Vito's podcast. And he talked about his company and what he does. And I invited Vito to come back to talk about a great topic, and that's called cash flow, which Vito talks about quite a bit in his planning and with his clients. And Vito, Kinum, tell us about Kinum a little bit.
Well, Kinum is a collection agency, Tom, that really goes against the grain of what most people assume a collection agency does and how they treat people. So the name Kinum, kin is family, num numbers, family before numbers, people before business. So we treat the debtors and the clients and even us consultants with diplomacy and respect, and that makes a big difference.
Well,
We're also, go ahead.
yeah, no, one of the things I learned from your company and the way you handle is at Google that has the survey.
Yeah, the 5-star.
Yeah, tell us about that. That's an intriguing stat.
It is, as we say, it's amazing, actually. We are a national firm. We have offices around the country and reviews from just about every state. Over 1,050 reviews as of this minute when we're recording this. And our average out of 5 is 4.92 on 1,050 plus reviews. Now, the real honor for me is to know that our collectors, because we have not only the flat fee, but we have collectors that call and collect money for our clients. They are getting 75% of our 5-star reviews are coming from folks that have been called and paid the collectors.
Wow.
It's amazing because they're being treated in a way, particularly with COVID. We've always been diplomatic. We're in our 10th year, but during COVID, as Emerald would say, we kicked it up a notch. Our diplomacy is more client-centered, focused on what they're going through because we're all going through the same stuff. And it's last year in 2020, we had a 25% increase, and this year we're at a 25% increase again. So this works, treating people with a little bit of honey versus vinegar, as your mother told you. It really works.
Well, you know, I've gotten to know you in the last year, and knowing you, I can see how it works.
Well, thank you.
Kinum hires these type of consultants to work like you. But we're going to learn a lot today. And one of the things that I've always thought was mythical in a way, working with businesses all my life, is exactly what you say, that some business owners think that receivables are money in the bank. And I think we're going to talk a little bit about dispelling that whole myth. So I'm going to hand it over to you, Vito. The one thing I will mention for the audience listening is Vito is going to go through some very good information. And I believe, Vito, you're going to make it available if someone.
Absolutely.
Okay. And we can get it, and I'll put it on the show notes where to get it, that kind of thing. Okay.
Great.
So,
well,
Vito,
I'm a teacher by vocation, Tom. So this is something that I really enjoy doing in my business. Doing these kinds of seminars. So I'm ready when you are.
Well, I'm always ready for Vito, and we won't do it today, but Vito's got one hell of a voice too, but we're not going to get into that today, right, Vito? Vito, I'm going to hand it over to you. Take it from here and let's learn.
Thank you, Tom, and welcome everybody. We're calling this Bridging the Gap, the top 10 tips for improving cash flow and liquidity. And I'm doing this especially prepared for Tom and his organization, which is a marvelous team, and I'm proud to be affiliated with. So let's start at the beginning. The key to success with your accounts receivables is to start early. So you will recover more when you start early. And you can see the depreciation here. So at 90 days, even at 90 days, you're losing, your money's depreciating about 27, 29%. At 180 days, you've lost about 70%. So early diplomatic intervention makes all the difference. In fact, you're losing a half a point a day from day 90 through 180. Don't do that. Doctor says it hurts when you do that. If you have uncollected revenue out, and let's just say it's $10,000, and the average business in America, they're working on a profit margin that could be as little as 4 or 5%. I think the average is somewhere between 5 and 7%. Let's just say that you're average and it's 5%. If you look at the chart, if you have $10,000 out on the street and your profit margin is 5%, that means you got to come up with $20,000 worth of new business to cover that money. So it makes a lot of sense if you have a system in place to recover that money so that you're not, struggling against the tide. So our program is called 10 Tips to Improving Cash Flow. And we're going to quickly go through these. And again, as Tom mentioned, we are going to make this whole PowerPoint available to you after the presentation. So tip 1 and tip 2, first, have a defined credit collection policy. I can't tell you how many particularly small businesses I've spoken to, and this is my second career, Tom. I've been in this business, I can't believe it, 18 years. And having a small business with no policy is pretty typical. So we need a system, and there should be procedures. And those procedures not only help you get paid, but it helps you in training your staff. And, everybody's talking today about the shortage of, good candidates to work in your company. So if you're going to train people, let's make it as easy as possible. And also defining your collection policy. You need your terms. You need your terms in writing, whether it's a patient that you're dealing with as a medical practice or a client, however you see it, that's the way that you have to take a look-see. Tip number 3, this is something that's always very popular. Address service requested. You've probably seen those words under the return address on your Visa bill, on your cell phone bill, on all of those kinds of bills, your medical bills. It's the first level of skip tracing. And there's a little fee in charge that might be $1 or 80 cents from the United States Postal Service. And it helps you to track people when they've moved and left a forwarding address and so on. So next time you get envelopes, for every business envelope in your company, you should put those 3 words under your return address. Tip 4, use your aging summary report, not your feelings. I find a lot of people are worried about contacting folks that owe money, particularly during COVID. We're finding people today. I had a call yesterday from a company, small business, only had a handful of debtors that they're worried about, but most of them were a year or more old because they didn't feel comfortable reaching out to people about paying their bills during COVID, which is really not a good thing. So you want to be diplomatic, but persistent, and use the numbers, right? So print out the aging summary. You might even want to use color ink or color paper just to highlight it, because it's something, it's one of those key indicators that you need to keep track of. And tip number 5 is to contact overdue amount accounts more frequently. You know, some people think you can only touch a debtor every 30 days. That's not correct. You should touch them more often. We certainly recommend, and what we do at our company is we will touch people between 7 and 15 days. You know, depends on the situation, and we can talk about that. But revenue cycle partners like Kinum can assist you with a number of little products that will help you and take the pressure off you and your staff. So one is a series of reminders they might use, which is not collections, but you know, it's sort of like having reminders going out that you might send. However, you may not have the staff to touch them every 7 to 10 days, which the companies have that automation. Um, or there are the legal demands, and that's sort of a first level of real collections, which is done in the name of the revenue cycle partner, the collection agency, and they can help with, in many cases like ours, commercial debt, consumer debt, medical debt. It's quite something, really, what needs there are in American industry. I had a school district in California that called me because they had 6 educators that were paid fees last year and then never taught the classes. Now that's a pretty that's a pretty special kind of problem. So we help businesses in all these different areas. In fact, even for our medical practices, some companies will collect from the insurance agencies. Tip number 6, this is about training. And, you know, my career started as an English teacher, so I'm into training and helping people do better. Be firm but courteous. You know, some of your people are a little jaded because they know the customers and they say, "Ah, come on, give them a break, give them a chance." So I like to talk about selling and salesmanship, but I like to use Dale Carnegie's definition of salesmanship, which is defined in 3 words: think, feel, and act. So your job as an employee is to get your client to think as you think about your product or your service. More importantly, to feel the way that you feel, because they're not going to act without emotion. And then get them to act in the way that you want them to in light of their benefit. It's in their best interest. And certainly in our work in collections, it's in their best interest to pay. Not only does it save them from being reported to the credit bureaus and that kind of stuff, but the peace of mind that comes from making the payments, and also the idea of, you know, getting something off your shoulders. That's powerful stuff. When you're communicating by phone, again, we're talking about being client-centered. Hope that your family is well and safe. That's why our collectors are getting those 5-star reviews, Tom. They're talking to people in a way that they've never been spoken to by collectors before. So to speak clearly, energetically, and be well-paced, have an objective in mind. And your objective, of course, is to get paid, but you also want to help. Let's see how we can help you. Let me show you what we can do for you today. And in case you have to follow up, you should be taking good notes. Your mental attitude when you make those calls internally, now I'm talking about, should be to expect success. Your goal is payment in full on the first call. When does your team start calling? Do you have a process? Do you have a plan? Does your team track the time and the days of the calls? Do they set goals for the number of calls? Do they celebrate when people hit those goals? I made 20 calls today. Uh, do you leave voicemail messages or call people at work? We'll talk more about that. Ask for the payment today. May I help you take care of this today? And you have to be positive, not negative. That's in all communication. But certainly here, I know, Mrs. Johnson, you expected clear explanations and diagnosis and treatment, as well as quality service and appointments delivered on time, as opposed to, this is going to cost you a lot more if we have to take further action, right? I mean, that's a terrible negative attitude. And positive, I know you have other responsibilities, as we all do. Hey, I know you've got problems, but we got to get paid. No, don't do that. Doctor says it hurts when you do that.
It hurts.
So when you're asking for money, and this is part of the training that we offer to our clients as well, it's a three-step process. Step one, be other-centered. Again, I hope your family is well and safe. It's been a terrible time for all of us. But show compassion when they're explaining their situation. Active listening is really, really important. I know how you feel. These things happen to all of us sometimes. And this approach can actually diffuse any possible anger or even unpleasant comments that they might make, and they might treat you in a way you don't expect. Step two, restate the obligation. Well, Mrs. Smith, you know your payment was due on July 15th this year. This should cause a little bit of guilt on their behalf. Maybe they'll realize you're right. Don't ask them, so how much can you pay? Or when can you pay me? Can you pay something? You know, those are not good questions because you're giving up the control. You want to ask the questions differently. You want to say, how much are you short? Step three. Mrs. Smith, of the 540 that is due, how much are you short right now? If they can pay something, then offer a date certain. This is an important phrase, a date certain to pay the balance. So you don't say, look, give me all right, you got 200 now, good. Give me that and the balance you can pay, in a month or two. No. If you give me the money today, the 9th of December, I'll expect, why don't we break it into 3 payments? Give me the 200 now, and then give me 175 in January, on January 10th, and then February 10th. Be specific, okay? And if they're short the whole amount, you're still in control of the payment terms. So you go back to step one and empathize with them. Tip number 7, admit and correct your mistakes as soon as possible. I mean, come on, your patients and clients realize that to err is human. And let's face it, there have been a lot of mistakes going on in the last 2 years in every aspect of our lives. This will, some people are going to appreciate your forthrightness when you are being transparent with people and you say, hey, you know what? We screwed up here. We made a mistake. Let me fix this for you. Don't try to cover things up. We get enough of that from you know who, you know where. Tip 8, this is important, very important. In fact, just within the last 10 days, the federal government has come in with a change in the laws, the first time since 1978. So you may have heard of the FDCPA, the Fair Debt Credit Collection Practices Act, Fair Debt Collection Practices Act. The first changes in that law in 43 years just started on December 1st of 2021. And these are your tax dollars at work, I'll tell you. And so there's a lot of changes. In fact, we heard recently, since I don't want to make this too partisan, Tom, but our president and CEO, two guys, one is on the Virginia American Collection Association. He's the president. The other just is on the Indiana Collection Association. He's the president. So we're on top of these things, and several agencies have gone out of business over this federal regulation F, because it's a cumbersome kind of a paperwork that's involved on the part of the agencies. But since we're on top of things, we're ready and we're going and we're moving forward. So you can go online and look at the Fair Debt Collection Practices Act and the TCPA. That's about the Cell Phone Practices Act. It's amazing. I think Al Gore might have invented that one, Tom. I'm not sure.
These are all shields and more corporate layers of regulation that's limit what you can do, right?
Right. Exactly. Well, listen, these rules, since they were formed, have been in favor of the debtors. Let me say it that way. Okay. But now there's another layer that comes even before the collection activities begin, where they have to verify the debt. And it's a little bit crazy, but we're prepared and we're moving forward with that. Tip number 9, use a third party sooner. I mentioned earlier, we've been hearing from people that a couple of things worked against them. So obviously COVID and people being out of work and, being in a financial situation that they have never been in before. A lot of the folks that we're reaching out to, the folks that owe money to our clients, they've never been in collections before. But, they lost a job, their health issues and so on. So the fact is that your employees have been up against it. You may have cut staff, you've given people extra jobs to do. It's crazy. So if you see that there's a way that you can save your team and protect them and get paid and do it at a reasonable cost, that's something you should consider very strongly.
Vito,
And
I want to bring,
yes.
I'm sorry, what you're showing me on tip 9, I want to go back, and you don't have to go back to that slide, but that first slide about the lapse in time and the percentage of receivables.
The depreciation. Yes.
I mean, the question I was going to ask you, I was going to let you get through, but you're hitting on some things that I think a lot of business owners need to know. And it would seem to me, with the stats being so accurate, because they are government stats and they've been the sources of the U.S. Commerce Department,
Right.
It behooves a company to, before it happens, to at least investigate a relationship with a company like yours, so that they know who to call and put a policy in play when they start having problems. Because it seems to me, it's like everything else. You have a problem, you pointed on it. It's an emotional reaction at first. I don't want to bother Tom. He's been such a good client for many years.
Right.
And all of a sudden, a month goes by, he'll pay me, and then 2 months go by, and it almost seems to me, in a logical sense, being pragmatic, that I think is to suggest to employers to investigate and to maybe interview firms like yours before it happens.
Yeah, well, you know what? That preparation pays dividends, but it's also a legal issue, Tom, because a lot of business owners will say to somebody, hey, look, if we don't get paid soon, we're going to our collection agency. Well, if you don't have a relationship with a collection agency and you make those statements, someone can sue you for harassment. That's what I meant earlier when we talked about the fact that the laws are in favor of the debtors.
Oh.
But look, here's the thing. If you ask a business owner today, Tom, do you use a collection agency? If they say no, it's usually for two reasons. One of two reasons. One, they don't want to upset their clients or their patients or whatever relationship they have, the people that owe them money, right? Their tenant.
Right.
The fact is, when you get to, as you see on the chart here, 6 months, a year, these people are not your clients anymore. They're gone. If they're supplying, if they're the kind of business where there's a regular purchase of your product and service and they're not doing that, they're someplace else. So to worry about that, I get the idea. You want to have a maintaining of your good relationship with the community and your customers. I get that. And so do we. But don't wait. Now, why? Number two, why do they wait? Because they're optimists and they don't want to pay a third, which is what it's typically, the cost is a third of what's collected nationally. So they don't want to give up a third because I know they're going to pay me, Tom. I mean, they've been my client for 15 years or 15 minutes, whatever it is. They may not be planning on paying you until you bring some leverage to the issue. So our paradigm shift, Tom, which is what you were addressing, is that if you know that it's a flat fee, $15, $25 is the max, and you know that the money's going to be paid directly to you, there's no percentage, and you know we're going to treat people with dignity and respect, why would you wait? You're hurting yourself.
Yeah, and the irony of this is, let's go back to and I'm speaking as a business owner, and
Yes.
my message is to them who's listening. Bill's been my client for 5 years. He would never do this. He'll pay me. Well, the problem here is it gets more embarrassing for both parties the longer you go.
That's right.
Bill may end up getting another vendor because he's too embarrassed to talk to you. Now you've lost. What's the value of a relationship? You put 5 years in. If just a memo, a reminder, just right up front, it retains that relationship that you've worked really hard to do, right?
Yeah, let's talk about this. Help me understand what's going on.
Yeah.
Right?
It's like I'll work with you.
Ignoring it.
Yeah, it's almost like you could say, Bill, you've been my client for 5 years. I love you, I dearly, but let's work this through together, right? That's a lot better than a phone call. Yeah, we'll do it, right?
Right, exactly.
I bring this up because, again, it's the same old story. When you have a company and you need receivables, you've got to do it the right way if you expect to get paid. Otherwise, you're going to lose a lot of it. I think this is a critical subject for a lot of people, especially now.
Tom, and you know who's getting really hurt with this are some of our B2B clients, because so many other businesses have gone out of business.
Right.
So you can't be the last one in line to get paid. You got to stick your head up and say, hey, you know what? I need to get paid. And don't wait. Get involved sooner, because the worst that's going to happen is they're going to get this diplomatic third-party demand. They're going to call you. They're going to say, hey, Tom, what the hell? You put me in collections? Yeah, Joe, I did, because, we got to get paid. And what's going on by you? How come we haven't got, and there's a dialogue, right? So that's what the demands will do for you. They motivate the patients. And particularly on the consumer demands, where we mention the credit bureau reporting, which is something we include at no additional cost, where it says on the demand, hey, this could affect your credit. We're not saying it does yet, right? But if it does, if it goes longer, it will. And that is enough of a encouragement for people to call you and say, what do we do about this? So those are reasons, good reasons to seek help. But when is the good time? I have a few ideas here. When people are abusing your policies and procedures, when they're breaking promises, you know the old joke, the check is in the mail, one of the three greatest lies, right?
Yeah.
Unable to reach them by phone, typical response, voicemail, he's in a meeting, answering service, etc. If the phone is disconnected or your cell phone is blocked, how about missed payments? The payments are getting smaller. Certified mail comes back unclaimed. They're disputing the balance, the quality of your service or the product. They say you'll get paid when I get paid, like in a medical practice, when the insurance company pays me, I'll pay. No. Admission of inability to pay. They bounce checks with no response to you. Those are the signs that you need to do something with a third party, I would suggest. And tip number 10, nobody collects every account. Even with a great team, a good process of billing, a strong collections policy, and strong relationships, some accounts will never be collected. But depending on your accounting in your business, if you do an accrual method and you actually employ a third-party agency, you're able to legitimately write off that debt. You know, a lot of people, Tom, say, I'm going to write off the debt, but they don't mean that. What they mean is they're not counting that as income.
Right.
But when you're writing it off, you're lowering your taxable liability.
But you have to be on an accrual accounting basis.
Yeah, the cash basis, you got to talk to your accountant. I'm not an accountant.
Yeah.
I'm an English teacher, gone bad. But, you know, the process, having a process that protects your team, the people on your staff, that gets you paid for a fixed flat fee and treats your folks with dignity, that's a victory.
Vito,
Yes, sir.
I have a couple of questions.
Okay.
You were, I don't want to interrupt what you're going through, but
Well, I just have one more slide and we can do that.
why don't you finish? Go finish and I'll come back to my questions.
Well, it's a quick little test on your legal IQ.
Okay.
Are these things true or false? A debt must be at least 90 days past due before you can send it to collections. Is that true or false? You must inform clients before turning them over to a collection agency. True or false? You cannot speak to a debtor's spouse regarding the debt. True or false? If a patient, for example, pays you $1 a month, you cannot turn their account over to collections. True or false? This is a good one. If a check is marked payment in full and it's not the full amount, you can simply scratch it out and put in the full amount. True or false? Even if you never use a collection agency, you can threaten to turn a client's account over anyway. True or false? So, Tom, did you see something that ran through all 6 of these? They're all false.
Well,
Just so you know.
And well, you know, it's interesting. Can you go back to that slide? There it is. Yeah. It's interesting because with the layers of government regulation over the years for the consumer, which puts collections at jeopardy at many times, I'm sure. You read some of these things and you almost have to question whether it's even legitimate. But I would not be surprised if some of these things would have been true, believe it or not, with the way the government works with no logical sense. But having said that, I do have a question. Actually, there's 2 things. I want to talk about having a written policy and procedure. And I want to talk about what we've talked about in the past. Who should be talking and calling about collections? You use the example of the part that Betty's coming in on Tuesday, she'll take care of it. Let's talk about that. That's important.
Yeah, well, people will say, well, the receptionist. I'll say, well, whose responsibility is to make these calls? And they say, well, you know, the receptionist is a little free in the afternoon, so she's going to make some calls around 2 to 3 o'clock. Oh, really? Has she been trained? Well, no, but she's got the time. Aha, that's not the answer. If they have somebody, Tom, we'll train them, we'll help them, you know, but they push it off. And worse, yesterday I had a call with a guy who owns a business. It's in the trucking industry. He repairs and parts. And he told me somebody owes him almost $9,000. And he's visiting this guy. He's going to his office. I said, are you kidding? That's dangerous. And, you know, you should be spending your time on getting new business, not on reselling this old business or threatening to do something about it. He said, yeah, I guess that makes sense. Yeah, it does. Be careful, please. And then the first question you had, Tom, let's go back to that.
The writing, the procedural.
Yeah, I want to go back to that. So what's the procedure? So when you have a defined policy, that talks to when you expect to be paid. It should be part of your onboarding of clients, you know. And I mentioned the phrase date certain. So many people will send out a statement monthly and they'll say due upon receipt. Oh, really? You know, the post office has been terrible during COVID. We have some people that our company sent checks out to our clients who, you know, money was collected on their behalf, and we send a check on the 15th of every month. We have people whose October check was sent out on the 15th of October. As of the other day, they still haven't received the checks. Now, all the checks went out at the same time, but the various post offices around the country are dealing with all kinds of issues. So you got to be very, very specific when you're talking to these people. The procedures, when are you going to send a statement? What's the date going to be? If you have one of those little, like a little chart, not a chart, but a graph, or, you know, like, shoot, what would I say? Like a row of an Excel spreadsheet on the bottom of your bill, and it says 30 days, 60 days, 90 days, 120. Get that off of your statement, because what you're saying to people is, okay, yeah, you wanted to go to 120, that's fine. You know, we're ready. We're just going to check off that box when that letter goes out from us.
Yeah.
No, that's not good. You got to think about the psychology of these things when you are sending out these bills. So that's something we help people review, and you know, we're more than willing to help with that.
Vito, go back to the slide that shows how much you have to make in sales. There we go. Now, this is where I'm sure any business owner looking at this video right now is going to sit up like I just did. But go down to that 4%. Let's use that 4%. 4%. And then across, you got $250,000 of new sales.
That's if they have 10,000 out. And let's face it, most of them have a lot more than that.
Yeah, that's my point. And to, you know, what does it cost you to increase sales by $200,000, by 500, whatever it is? This is what, when you said to me, people, I think receivables is money in the bank. And obviously, when you look at the facts of collection, they're anything but. But this is so significant. I mean, I'm looking at $25,000 at 4%. You got to do $625,000 of new business to make that money. That's a lot of expense. And, you know, when you have to expand operations, you spend more money expanding. So this is a real good chart that I think a lot of people, business owners, are not aware of in their head. They're not thinking of what it's really costing them.
Right.
Besides the relationship and the time that their firm has to spend trying to get it.
And how about making payroll, Tom?
Payroll, that's right. Yeah.
You know, all of that is involved in this chart, and beyond the chart. So that's why having the policy, as you rightly pointed out, is important, because then you know what the team is going to be working on, and they know what you expect as the business owner. You know what they're working on. It's a win-win.
I have, my question to you, I just spoke with an accountant yesterday. And it was a situation where his client had not done anything. And when I called the CPA, he really didn't know. And I said, it's something you really should know about it, because at some point, if you're not aware of this stuff, you could be hung out to dry with malpractice, because you're the advisor to this guy. And I'm looking at receivables as almost a whole different department. And it would behoove CPAs and accounting firms to know more about collections than they do, I would
Very
think.
interesting. Yeah, very interesting. Tom, as you have, and that's how we met. We've been doing a lot of online networking during COVID. And not too long ago, I think it was actually in late October, I was on a call primarily with CPAs and attorneys. I couldn't believe what the CPAs were saying. They sloughed it off to say, well, when someone owes our firm money, I'm the CPA, I call and I say, hey, our partners have asked me to call you. This is serious now. And I looked at them and I thought to because they were not, there was not an open mind in the bunch, Tom. I looked at them and I said, okay, that's how you're going to do it? All right, that's fine. They're losing credibility with their people. They're not getting paid, and they're aggravating their clients who will leave them. So, they're wasting their time when they're trying to recover this money, because it's not like in 30 days.
No.
It's like in 6 months. The money's old.
Vito, this opens a can of worms as a
Uh-oh.
topic in and of itself,
Going
because
fishing?
yeah, it's going fishing, but it's so problematic in all parts of the business, from your employees that are stressed out having to do this, to not getting money, to having to make more sales to make up the difference, to the relationship, to the loss of the relationship. It's so problematic as far as a topic where people are dismissing it, almost to the point where it should be more of an educational part. If you're going to the business, one of the things you got to learn about is how to handle collections. It should be a course. I've been in business 51 years. This was all new to me. I never thought of it, but I can see how problematic it's going to be for a lot of people, especially now where a lot of businesses close.
That's very, very astute, Tom. I've often spoken with, about 40% of our business at Kinum is with medical.
Yeah.
And I've often spoken to doctors who's, we never had anything like this in college or in medical school.
Yeah.
Of course, a lot of doctors think they know how to do it anyway, because that's their nature. But there's not much training on this, and we're more than willing to help. The secret, as I say it, early diplomatic third-party interjection, right? Get involved with a third party early, and it's going to pay dividends for you.
Well, I'm going to, with my new learned information, make sure that when we talk to our clients, we're bringing up this part of their business, because it is part of their business. just like any other cash flow part of their business. So Vito, we're just about out of time, but is there anything you'd like to leave us with? I'm going to make sure everybody has the ability to get these slides on the show notes and contact information if they'd like to pick up the phone and have a conversation with you.
Yeah, of course. That would be wonderful. I even have an 800 number for them.
Which we'll have right in the show notes. No, it won't even cost them a dime, and they'll get to meet one of the nicest people you could ever meet, in Vito MAZZA.
Oh, forget about it. Yes, so nice.
So
And
Vito,
yeah, Tom, I appreciate this very much. And the thing that I would say is that one of my mentors used to say that the mark of a truly educated person is an open mind. Just be a little open-minded and find out more, as you just shared with us, that with all your experience, these are some new ideas. And of course, this has been exacerbated by COVID.
yeah.
So we're doing a lot of things today we never thought about before, but now they're part of our lifestyle and our business life. So leadership requires us to not just go with the flow, but to stay ahead of the flow and find out how we can be of service to not only our clients, but our staff. That's what leadership is about, not just a title.
Well, there's two things here. The topic in and of itself of receivables and what you just shared with us through these 10 tips, but there also the methodology being Kinum and how well, I mean, when you get a 5-star rating from Google, on both sides of that dollar, that's incredible. That's an incredible story. So good
Thank
for
you.
you, and it's really good. And Vito, thank you so much for taking the time.
Thank you, Tom.
Have a
I
wonderful.
appreciate it. And I hope I can be of service to any of your large number of fans across the country.
Yes, the world. That's
The global Tom Perrone fan network.
Thank you, Vito.
All right, Tom. Thank you. Have a great day.
Thank you. This was another great program, and we hope you enjoy the information which was shared with us. If you would like to be on the show, email me at tperrone@necgginc.com. That's Tom, or tperrone@necgginc.com, or call me at 203-530-6615. That's 203-530-6615. Also, consider picking up a copy of my book, Unlocking Your Business DNA. You can get it at Amazon, both paperback and Kindle, and profits go to Wounded Warrior Foundation. This book has great ideas of how to build your business while also finding your beach in life. Again, thanks for viewing this webinar.